Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of finance and business through SEC filings. Today we're taking a look at Cottonwood Communities Incorporated, its latest filing, and it seems like they've been busy raising some funds, which might mean some interesting things for their future. Before we dive in, if you like getting clear, straightforward insights from these important documents, make sure you hit that subscribe button. Also, we have a fantastic community growing on Discord. To discuss these findings, join us through the link in the description below. So, Cottonwood Communities Incorporated has put out a report detailing some of their recent financial activities. This isn't a massive financial statement like a big quarterly or annual report, but it is called a Current Report Form 8. Think of it as a quick update filing that companies have to make when something significant happens, and in this case, it is all about selling more stock. The core of this filing revolves around something called a preferred offering. Essentially, Cottonwood initiated a plan to sell a maximum of $150 million worth of a specific kind of stock called Series, a convertible preferred stock. They're offering this to what they consider accredited investors. Now, an accredited investor is basically someone who meets certain income or net worth requirements to show they can handle the risks of investing in these types of deals. The company is selling these shares at $10 each, and they're saying this whole deal is exempt from the usual registration requirements because it is only being offered to these accredited investors, and they aren't advertising it widely, which is allowed under a specific rule called Rule 506B of Regulation D. Now, for the really interesting bit, the actual money made and shares sold. Between the 21st of November and the 27th of November of 2025, Cottonwood sold a little over 141,000 shares of this series, a convertible preferred stock. This brought in a rather modest $1.375 million. It is important to note that these sales are part of that larger offering we just talked about. In connection with these sales, they paid out quite a bit in fees. They paid around $42,000 in selling commissions and another $41,250 in placement fees. These are essentially payments to the people who help them find buyers for the stock. It shows that securing investment money isn't free, there are always costs involved. As of the end of November 2025, they had over 11 million shares of this series, a convertible preferred stock, outstanding. This suggests they are actively trying to grow their capital base. Now let's consider what this means. Cottonwood is selling a special type of stock that can be converted into regular stock later on. They are raising capital not through a big public offering where anyone can buy, but through private placements to wealthier investors. This is a common strategy for companies looking to fund growth or specific projects without immediately impacting their public stock price or going through the rigors of a full public registration. The fact that they are paying selling commissions and placement fees indicates they are likely working with investment banks or brokers to facilitate these sales. The amounts they've raised in this specific period, while significant, aren't the full $150 million. They are authorized to raise, so it looks like this offering is ongoing. This tells us the company is likely pursuing expansion or has projects that require this kind of funding. From a Warren Buffett perspective, you want to see companies raise money wisely. Is this money being deployed effectively to generate more profits or build valuable assets? This report doesn't give us that picture yet, but it shows their intention to grow. The key will be how they use this capital. Will it lead to more properties, more investments, and ultimately more income and value for shareholders? That is the ultimate question. Looking at the structure of selling commissions and placement fees are standard costs of capital raising. They are essentially the price of admission for getting those funds. For a company like Cottonwood, it is crucial to ensure the return on investment from the funds raised significantly outweighs these costs. The numbers here are relatively small compared to the total offering size, but they reflect a real expense in their pursuit of capital. So to wrap up, Cottonwood Communities Incorporated is actively raising capital through private placements of its series, a convertible preferred stock. They've successfully sold a portion of this offering in late November, bringing in over $1 million, but also incurring significant fees. This is a move towards growth and expansion, and for investors, the real story will be in how this newly acquired capital is used to generate future returns. Alright, that is our brief look into Cottonwood Communities Incorporated's latest update. What do you think about these fundraising efforts, and what might it mean for the company's future? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more content like this. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we'll see you on the next one.